Hello and welcome to This Week in Review. This weekly segment is designed to highlight a few things you may have missed this week, what they mean for financial markets, and most importantly, investors. Now let's review what happened this week. First, political developments in South Korea and France. On Tuesday, South Korea's president declared martial law, then lifted the order early Wednesday after the South Korean parliament voted against it. Meanwhile, in France, the government lost a no-confidence vote on Wednesday, ushering fresh uncertainty over what happens next. When there's political turmoil like this, it can be unsettling and weigh on sentiment. The good news? Uncertainty doesn't last forever. Eventually, things settle, investors adjust, and markets move forward. Globally, these short-term political shifts aren't likely to have a big impact for investors over the long term. And historically, deeply gridlocked governments are typically a bullish feature for stocks. Next up, OPEC Plus and oil prices. On Thursday, OPEC Plus met to discuss their plans for oil production. These meetings can influence oil prices, but OPEC Plus has less sway than it did before the North American oil boom. Oil prices have bounced around recently, with geopolitical conflict in the Middle East adding to volatility. Despite this, global oil prices were still close to where they were at the start of this year and even the end of 2021, around $75 per barrel. These days, the global oil supply is diversified, making it less prone to supply swings from any one supplier. Absent any unexpected shocks, that should keep oil prices relatively range-bound and mute any prolonged inflationary impacts from energy prices. Finally, a look at U.S. jobs. Today, the latest U.S. jobs report showed strong November hiring. In our view, it's important for long-term investors to not get caught up in one month's numbers, as they can be skewed by temporary factors. The bigger picture? Job growth is slowing compared to 2021 and 2022. We think this is more of a return to normal pre-pandemic trends, not a signal of a looming recession. Unemployment ticked up earlier this year, but that was largely because more people were looking for work, not because of significant layoffs. For all the attention job reports get, remember, stocks tend to look ahead, not backwards. And job reports often reflect where the economy has been and not necessarily where it's going. And that's it for this episode of This Week in Review. To learn more about what we're watching, check out our other series, 3 Things You Need to Know This Week, released each Monday. You can also visit fisherinvestments.com for more insights. Thank you for joining us, and don't forget to subscribe.